Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It's Thursday, December the 16th, and just wanted to take some time to discuss what happened in markets last week, briefly touch on that a little bit, and then discuss what's really happened in a jam-packed week this week in markets, and then explain a little bit why the 10-year Treasury is still hovering around 1.45% and hasn't moved higher off of the news of the inflation data that we got last week. So last week was a strong week in the equity markets. The S&P 500 was up almost 5% at 4.7%. The mid-cap index was up 3.4%, and the small-cap index, as measured by the S&P 600, was up 3.2%. So a nice rally-back week in the markets, and the markets finished the week moving much stronger. As we headed into this week, we did see a little bit of hesitation and pullback in the markets on Monday. News of the Omicron variant spreading, and we also were waiting a big Fed meeting, a two-day meeting over Tuesday and Wednesday. Also this week we did get the producer price index, which is how much producers are paying for the goods that they provide, and that is another inflationary number. And so what producers are buying, their cost of goods have gone up 9.8% year over year. We got CPI data, which is what the consumer is paying year over year, at 6.8% on an inflationary note. So that really sent markets kind of tumbling a little bit. But as we got to the end of the meeting yesterday at 2 p.m., Fed Chair Jay Powell came out and spoke and said that the Fed is going to ramp up their tapering and finish sooner than maybe that they had even anticipated or announced. And that really sent markets moving much higher yesterday, and it was quite a turnaround day where you saw the Dow down a couple hundred points at the lows and flip to finish up almost 1% on the day. So the big news was the Fed meeting and the Fed adjusting the taper. And again, interest rates really didn't respond tremendously to that. So I really wanted to explain why there's kind of a counter trend. So typically, to break down how it normally works, is when you're in a rising inflationary environment, interest rates are going to rise within the inflation. That's because the value of the dollar is less with inflation, and so you're trying to keep those treasury yields in line with inflation so that you're staying ahead and your real rate of return is not negative. But one of the consequences from the all of the Relief Act and the amount of money that has been pumped into the system is that money has to go somewhere. And so if you were to look at, if you had a big chunk of cash right now and you went to one of the large institutions, one of the large financial institutions, banks, and went to deposit a significant amount of money, they would actually turn you away right now because they have so much cash on their balance sheet, and the loan demand is not meeting the overall deposit demand. So what do you do if you can't lend that money out as a bank? Well, you go buy what are considered risk-free objects like 10-year treasuries and other treasury notes. And so you see a significant, so whenever you have a lot of buying pressure in bonds, the price of the bond is going up, but the yield is going down. So what we have done is we have over liquefied or put too much money into the system, and the same thing happened in Europe. The European banks are doing the same thing. They're buying up the 10-year treasury and the other treasury notes here in the United States, keeping yields low. So there's just so much money out there that it's constantly chasing a return, and some of the institutions here can't put that money into any type of risky assets, so they have to keep them in risk-free assets. So because there's so much liquidity in the system, yields have stayed relatively flat. But as the Fed begins to taper and stop buying so many bonds and mortgage-backed securities, you should see a more normalization in the bond market, matching more or less with the inflationary data. So our projection was the Fed continues to taper, that you will see interest rates rise and start to move in that right direction. So as always, if you have questions about what's going on with your individual portfolio or strategies to take, feel free to give us a call. You can reach us at 904-346-3700. 3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day. Thank you so much.